Welcome back, everyone. The U.S. Treasury has sanctioned Tornado Cash, a so-called crypto mixing service, accusing it of laundering billions of dollars.
This September, the much-anticipated Ethereum Merge is expected to be completed. Ethereum would be transitioning from proof-of-work consensus to a proof-of-stake consensus. Sounds simple if you do understand the business backbone that supports cryptocurrencies. This transition from Ethereum mainnet to the Beacon network will eliminate the miners that have supported Ethereum over the years. We're expecting a major shakeup in the cryptocurrency market, as this is not just going to affect Ethereum, but all cryptocurrencies. This could be the end for some cryptocurrencies, or the beginning. Subscribe so we keep you abreast of all new developments in the crypto market. Let's get on with the video.
So I think that's part of the reason why it's important to kind of keep the principles in mind, whether by principles in decentralization or privacy, or just simple things like making sure your protocols are economically sound. Though I think there's also this other side of the trade-off where you do have to kind of actually survive long enough, and you don't want to kind of go insolvent before the market becomes rational again, and that's it's a hard trade-off. I think it's something that we grapple with internally, even within the Ethereum project. I think the things that are closer to the base layer tends to be things where it's more important to be principled and be incredibly neutral, and be decentralized and be more uncompromising in those values, because if the bottom layer breaks or gets corrupted in some way, then ultimately everything built on top of that goes into the trash too. And I do think that things that are built on top do have more leeway, right? Because ultimately, the point of a startup is not to have a 90% plus chance of surviving. The point of a startup is to have a 10% chance of being great instead of just a 1% chance of being great. And I think that does lead to a different mindset. Though at the same time, I do think that as things in the ecosystem become systemically important, it does start to make sense to care about some of those other things too.
The Ethereum blockchain requires 300 terawatts per hour. This is more energy than Saudi Arabia, Mexico, and Italy run on. According to Ethereum Foundation, a single transaction on the Ethereum blockchain requires 84,000 watt-hours to execute on the proof-of-work protocol, but only 35 watt-hours on the proof-of-stake protocol. Do you think 84,000 watt-hours power consumption per ETH transaction is crazy? You'd be shocked to learn that Bitcoin requires about 14 times this power at 1.13 million watts per hour. This means moving the POS consensus would cut Ethereum's energy consumption by a mind-blowing 99.95%. So why is everyone not happy about this? Is this not progress? Ethereum's network is sustained by a network of miners that have invested heavily in equipment, infrastructure, and power to run their mining farms. Proof-of-stake consensus is the end of the mining farms, because the consensus would shift from the mining computers that are running at solving hashes to individual Ethereum owners. A prominent Ethereum miner, Chandler Guo, has already proposed a forking on the Ethereum chain. So we're most likely to have two Ethereum tokens after the merge. The ETHW token to serve the POW consensus chain, and the ETHS to serve the POS chain. This is not a pipe dream. Exchanges such as Huobi and Poloniex are already committed to supporting the ETHW and the ETHS, so this fork is inevitable. Is Vitalik scared this merge would collapse the whole Ethereum project? He says he's not afraid of failing, but I'm sure that if you have some Ethereum in your wallet, you hope it all works out. Next, Brian Armstrong, CEO of Coinbase, reveals the big changes of Ethereum.
I haven't validated this myself, but it appears that they are censoring some transactions that were kind of labeled in this recent Tornado Cash issue. But also my understanding is that this is the first time in the history of OFAC they've actually put a technology, a smart contract address on a sanction list. And this is something the lawyers are looking into at various organizations around the world. CCI, EFF, Coin Center are all looking at this and saying, actually, is that within the statutory authority of OFAC to sanction a technology? I think they may only be given the power by Congress to sanction a person or some piece of property or something like that, and not a technology. So my guess is there's going to be a court case on that'll challenge it, that has a pretty high successful chance of winning, is my guess. But let's say even if you put all of that aside, you don't think that that's going to work, or you just, in some abundance of caution, you want to make sure you don't do it. I think it's potentially risking the bigger thing that we're all trying to do here. And my personal opinion is that if any mining pool or validator who does not take the actions that are in line with the participants there, like people participating in that mining pool, they should leave that mining pool. I think it's a vote of no confidence for people to leave those, and it's a way for the community to really say, hey, we're all here about building a technology that truly is decentralized and global, and it's not captured by any one particular country or something. It's like North Korea has a private internet. Like, we don't want to be on the private internet of North Korea. We want to be on the global internet, right? Or China heavily filters the internet. We want, in America and the free world, various places around the world, most of the countries, we want to be on an open internet. That's what's driven all of this innovation. And yes, occasionally a bad person, uses the internet or something like that, just like they occasionally use cryptocurrency. But go prosecute the bad person. Don't prosecute the technology. So that's kind of what I want to stand for. And I put out a tweet related to that. Coinbase is involved in this too. I mean, we're a large validator of Ethereum, and so we would probably put out a legal challenge or something like that before it ever became a major issue. But if it ever really came down to it, I think we would, minimize our Ethereum 2 validation, or even in the worst case, eliminate it if it meant preserving the integrity of the overall network. So, Vitalik, I don't know if you have an opinion on it or you want to jump in, but yeah, those are my thoughts.
Yeah, no, I think that's definitely an excellent comments all around. I think I agree with all parts of it, and I think obviously I'm fully supportive of people's need to comply with the regulators in whatever jurisdiction that they're in. But if in whatever jurisdiction you're in, it happens to be impossible to simultaneously do that and be a good citizen of the Ethereum network, then the honorable thing to do is to shut down. But I think also it's a very correct comment that from a purely legal standpoint, as far as I can tell, we are very far from that point. And it's great that there are people like CoinCenter and all of these organizations making this really active effort to make sure that even from that we do actually kind of get a fair shot.
Last month, the U.S. Treasury's Office of Foreign Assets Control, OFAC, sanctioned the popular Ethereum mixer Tornado Cash based on their role in laundering cryptocurrencies worth $455 million in June this year. This is one of many sanctions that is strangling cryptocurrency operators, though most of these sanctions are based on legitimate legal grounds, but this has cast serious doubt on how immune the supposed decentralized networks are to government control. Brian Armstrong, who is CEO of the cryptocurrency exchange Coinbase, is weighing on the possibilities of legal redress through the courts in establishing boundaries to regulators. It would be remembered that his exchange has been heavily hit with investigations by the Fed, which he thinks is unfair. Moving to POS against POW would actually help decentralize the Ethereum network more and put mining in the hands of every user, instead of just mining pools alone that can be easily tracked and regulated. The second largest cryptocurrency's move to cut power requirement by 99.95% makes everyone invested as miners, with its POS consensus, would have consequences that are sure to impact even Bitcoin. Would users still trust Bitcoin mining farms to sustain their mining activity, even with the high energy cost? Would we see more Bitcoin holders sell their Bitcoin for Ethereum if the merge is successful? One thing is for sure, this is going to shake the cryptocurrency market. Are you ready?